Good morning. Welcome, traders. It is Saturday, the 10th of January, 2026. This is my weekly performance summary for the trades that led up to today, week ending today. And I'm your host, Jason Allen from netwinningtrader.com. So I want to say thanks for coming to my first inaugural address of the new year, my first week's worth of trading. I just want to do a little house cleaning for you guys that are maybe brand new, just maybe hearing me for the first couple of times or whatnot. You wouldn't necessarily know what goes on day to day in my trading world. And there's been some changes that are occurring for me that are all good. And that's going to affect my participation in the markets a little bit. I think it'll actually allow for better gains, more controlled risk management. I'll be using all the same tools that I've created at netwinningtrader.com. So really, this is going to be a benefit to you because I know a lot of guys who listen to broadcasts like this are really looking for something to improve their trading results. And a lot of times, all you got to do is watch somebody who knows what they're doing long enough, and you go, you know what, maybe I should explore what that person offers. And that's my hope for you is that you'll see that what I do here from my own accounts, these are real money accounts, um, that there's really something of huge value that I put together for you. So that being said, I'm going to get right to work for the week ending 1/10/2026. But I do want to remind you that because of those changes, I'm moving money around, opening a new account, had a little business come in to do some things with. And that may mean that I may not be available to actually participate in the markets to my full capability off and on during this transitional period of a few weeks. So that means I might not do a trading performance summary for the week. I may not do anything for that week, and I'll just have to post that, nothing happened. So I will keep you abreast of what's occurring at my end. I don't expect this to take more than a week or two to upgrade what I'm doing. But I think in the long run, you're going to really like what you see. And so I want to encourage you to make it a regular stop. Every week, I'll be doing this on Saturdays until, well, either, until we don't have, there's no money left for anyone else to get, or we come up with a better idea. So, guys, let me get right to work. And let's start with what I call the numbers. These are closed trades. And when I say closed trades, these are positions that are done. This is how we turned out. I usually typically hold trades over the weekend, and I show you those next. But this time, didn't do that. Everything's flat as we make these changes. But up to today was business as usual for the first week of the year. And here's how we did. We had a total of long trades 9, short trades 11. As those of you that aren't familiar yet with the price agnostic method that I use, the opportunities that present themselves might be on the long side, might be on the short side. We don't know. So we take all of them. And sometimes the longs win and sometimes the shorts win. And hopefully, what we're looking for is we make more money on the winning sides than we give back on the losing sides. So sometimes that means I'm busy. Well, I was putting positions on. And so that's a lot of work. 20 trades total for the week. That's typically a big week. I don't normally do that many trades or more typically unless I'm getting positioned. And in the case of this first week, with the new changes that I'll be developing, all of those trades that went on, I decided to take them all off. Well, we could hold some of them. Some you'll see we maybe could have, well, would have done better by holding into next week. But as I said, we got some stuff happening here. So that being said, 20 trades, a little bit more than typical. Lost on 6 longs, lost on 5 shorts, for a total lost number of 11 losing trades. Lost 141.2 pips total. For those of you that are new and want to know why I put pips up and not dollars, that's because we can scale what we do. Um, I don't have any idea how big you as a trader might be. So we would look to say, in your case, in your size account, what is a pip worth and how does that affect you? So you would want to use the calculations for your size account when we talk about pips gained or lost. So pips lost for the week, 141.2. Good news is, of course, we made more than that. Had 9 winning trades, 5 long wins, 4 short wins, total of 842.5 pips on the winning sides. Total gain for the week after taking out losses, 701.3. So 700 pips for a week. That's considered a good week. I'd like to do that every week for the rest of my life, but as you will see as time goes on, we don't necessarily do this well all the time. But typically, week to week to week, month after month after month, it's a net gain consistently. And that's what you want from any trading approach that you decide to put some time and effort into: consistency. So, that being said, gains for the week. When we talk about holding open trades, no pounds, no euros, no yen, and no CAD. So, my open trade equity is 0 pips. That's it. I'm going to go ahead and basically restart the year once we get rolling with these new changes, and we'll pick up where we left off. I'll go ahead and just real briefly run you through the trades by market. For those of you that aren't familiar with the trades that I do, I trade the top 4 major pairs against the US dollar. That's pound, euro, yen, and Canadian. And that covers about 90%, I think, of all the economic activity that happens in the world. Most of the world's activity flows through these 4 pairs, through the dollar and through pounds, euro, yen, and CAD. So, open trade gains for the major pairs, nothing right now. And let's take a look at how they did per market. So, we look at pounds. For those of you that, let me get my pen going here. And I like to use this color. For those of you that know what the signals mean, got short at the top of the market for the week on pounds at around the 135.60 area, and basically continued to hold that trade through the week as the market continued to decline all the way into Friday. You see here a couple of um, H reversals from the buy side, meaning this is how this would have played out during the week. Now these trend signals, which these are what these are. These are trend signals. We ignore those when getting initially positioned. We use those to manage adding to the positions as well as holding them. So right now, what happened in pounds, very simply, if we were holding into next week and all the rest, I would have added to the short side on this trend signal here. Would have put another short on for net 2 positions short on pounds. And as you can see, the reversal patterns from the side over here, down here at the bottom, we would have taken actually would have taken the first one. The first one would have given us an entry of right about there. And we would have been stopped out actually on the next signal for a loss right about there. And then the next signal we would have taken and gone long right there. So for the week, I took money out of pounds because I was short from the high and liquidated into the close. I did not take the reversal patterns because I knew we would be flat through the next week, and I did not add to the position when I had the opportunity, knowing that I'd be flat into next week. So, as you can see, the opportunity to make money was there in pounds. Reversal patterns showed up to put the price agnostic method to work fully. Of course, next week, if pounds bounce from here, we would have taken off nice gains anyway, and we'd have a long from somewhere under the market, perhaps maybe in the next week. But since we don't have that on, maybe you might want to watch that, see how that turns out for next week, and we'll discuss it if we need to at some point. Euro, basically the same trade. And we look at Euro, actually from the holiday period of time, I did hold one open position, and that was short, and I added to it here, stopped out here, and then added to it again on this signal. So I had two positions on as we went into the end of the week. Now you notice the reversal patterns were there for the price agnostic method. We would have ignored this one because it is in range. That's one of the rules that I operate with, so we can just go ahead and X out the X. But we would have taken this one here because that is right against previous support and resistance, right? That would have been a good quality buy, but as you can see, it didn't work anyway. We would have had a loss on it to this point. And then, of course, as we went into the end of the week, we would have had a nice opportunity at some point somewhere to get positioned right around the 1640 area, right about in there somewhere. We would have most likely taken the first one, had a small loss, hold through the second and the third ones with an open trade loss, stopped out as the market made the absolute low, and then re-entered on that price area again at the end of the bar. So same scenario basically in pounds and euro. In this case, I had two positions on. Eventually, I took off at the close for some nice gains. In fact, I think on euro, these two together, I think that was the biggest gain of the pairs for the week. I don't really keep track of that, but I can look if we need to at some point. We have questions, you know. Yen, believe it or not, I had nothing on at the start of the week. And due to the fact that we had no buy signals down here other than the trend buy, I didn't have a long working, so I didn't use it because it's not for that. It's for adding to winners. So this big move that happened Thursday into Friday didn't get. I did have small loss on the HX here that came in because that actually, I don't know if you know this, but my signals are automated. And as it turned out, the automation was running for the short side on yen. I forgot to turn it off. So I had to liquidate with a loss there, a small one. And I would have taken the XH or the H anyway. I think this first one we would have sat through and we'd be short for the weekend roughly from the highs. That's where we would have been, but we're not there. But in any case, small losses in yen. And then Canada was a nice move to the downside. I'm sorry, to the upside. And this is actually a textbook case of opportunity developing. Came in long from the holidays, added to Canada right here early in the week, and just held on. Uh, all of these reversal patterns that were here earlier in the week, the first two actually were not qualified because I didn't have a big enough gain held at that point. When I do the opposite side position, there's a rule set. And one of the rules is we got to be holding at least a 100-point gain on the first add or the first reversal against the position. So that didn't happen. No big deal. We came down. I added to the position on the trend buys and just held on. The remaining H reversal here would not have worked. That would have been a small loss, and the H reversal here would have been a small loss. Um, but actually, we didn't take them because of heading into next week. So I made some nice money on the long side in Canada. The biggest single trade for the week was the long that I came in from before down here at the bottom. But in any case, we would have been short. Actually, this is a textbook short position from the high prints. Look at that. Market came right up to previous support and resistance and held right inside there, offering a sell signal at the same time. This I would never have hesitated to not take this trade. So we don't have it on now. And as you can see, the price agnostic method provides lots of opportunity from both sides, and we take them. In the case of putting together a little bit extra addition to my situation here, I decided to be flat into the weekend. So I'd have nice open trades working, would have moved stops up to keep most of it, and then would have been looking to add the opposite side and then let it work for another 2 or 3 weeks if we have to. But in fairness to the listener, Um, I just don't feel that holding open trades when I've got things going on that require my attention is prudent. Um, some people do it because it doesn't really matter what market doesn't care, if we have positions on. And some people like to do that, but when I'm doing something that requires my full attention, I don't want to miss something. So I tend to remain flat during those kind of times. If somebody's getting married and I'm going to be out of town for 4 days, I'm flat. I just don't want to be interrupted. But in any case, it is what it is. So we've got good gains for the week that we booked. But if this was a typical week, would have had less closed trades and more open positions on the other side. Right now, there's nothing to do but wait until we get started again. Hopefully, that'll be right away. If not, maybe a week or two in here where I'm going to stand aside, and I'll keep you posted on that. Don't worry, not going anywhere. And that being said, let me go ahead and wrap up for today. So thanks for listening. Don't forget, I'll be posting every Saturday. If you're one of those traders that really considers them serious about better tools, you really want to get better at this, I'm going to encourage you to go to my website right here, netwinningtrader.com, and have a look around. There's some free stuff there too, but mostly I'm interested in seeing if you'd like to become a member of the site. Also, want to remind you, in case you don't know, I do a free daily podcast, Traders Daily Discipline. In there, it's important you note, I don't necessarily talk about markets and price action as much. What I talk about are the things that lead up to understanding the markets, that lead up to clarity of observation, understanding how to create a winning method, understanding the psychology behind this, understanding how to create tools for yourself, how to invent things for yourself. It's more a disciplined approach, a method to get a few minutes in every day at the start of the day when it's critical. You're fresh, you're ready to go. You're going to put some time and effort into improving your finances. Let's not forget some important stuff. And every now and then I put a few gems out there that people really like, and I get some good feedback on that. So if you're one of those traders that like what you see at Traders Daily Discipline, please feel free to post a comment. You can also get the podcast through Apple Podcast or Spotify Podcasts. Just search netwinningtrader.com. You can also search Traders Daily Discipline. You'll find it. There is a link. I think if you're looking at this on YouTube, it should be listed below. It'll take you right to the sign up page for Substack, where I actually keep it. You can also go to Substack and search for netwinningtrader.com or Traders Daily Discipline. I'm actually going to put that in there because some people tell me that the link doesn't always show. Anyway, that's it. Let me just mention this in closing until we see each other on Monday, the 12th, for the next Traders Daily Discipline. I want to remind you that complete details of everything I offer is on the website. A lot of people don't know that I do personal coaching. A lot of people don't know that I do free content. There's some stuff there, so you might want to have a look around. And if you've got comments or questions, you can always email me, support@netwinningtrader.com. I do have a web guy, and his name is Tony Shepard. Tony is actually a former client of my Psychology of Trading course and is a full-time trader. He also does web work. And he will make sure that I get anything that comes in to support. Usually he gets it and handles it, but if you're there and you want to talk to me, just say, hey, it's Jason, or it's for this one's for Jason, or say hi Tony, pass this on, whatever. He'll take care of it. But support@netwinningtrader.com, and I'd love to hear from you. And the last thing I want to leave you with is always remember this, guys. Always, the battle for the money is in your mind. The business of trading is not about markets, it's not about analysis, and it's really not about the money. The markets themselves are incidental to the process of becoming a winner at this. Once you master trading for yourself, you'll be able to trade any market, anytime, for any reason, and you should be able to pull out nice gains all the time. And you'll also be equipped for handling things in your own personal life better Because in order to win at this business, you've got to confront things that slow you down that you may not even know about. And those things can transfer out of trading into your regular life. So a lot of times what we can talk about in here are tool sets that you might want to apply to other things in your world. You may not even know that some of those things are slowing you down from making gains. If that's the case, then you get a double benefit for participating. So that being said, I will let you go. Have a great rest of the weekend. I'll see you on my morning Traders Daily Discipline on Monday, the 12th. Between now and then, good luck, good trading. See you soon.